Japanese candlesticks. Understand the basics. Candlesticks pattern. Japanese candlestick is one of the most commonly used in foreign exchange, commodities, financial indices and other underlying assets, carry a high level of leverage in trading. The candles may fluctuate rapidly, reflect unforeseeable changes in patterns of which none can be controlled by you or by anybody. Please take notes. From time to time please review the candlesticks patterns I shared with you. At end of this video you will learn the probability patterns to maximize your profits. Lastly but not least, create money management and consider your investment which you can afford to lose. Please share with others if you master the skills. Candlestick basics. Bullish and bearish candles. Neutral basic pattern, spinning tops, with a short body and two long wicks. The color of the body is not important. Spinning top may be an uptrend or a downtrend. Signal that a reversal is on the way. The rush of buying or selling is indecision. Marabazu. Candlesticks. Lack of wicks. The session opened at the high price of the day and closed at the low price of the day. In a bullish Marabazu, buyers control the price throughout the day, from the opening till to the close. In a bearish Marabazu, sellers controls the price from the opening till to the close. If a green Marabazu occurs at the end of an uptrend, a continuation is likely. If a green Marabazu occurs at the end of a downtrend, a reversal is likely. If a red Marabazu occurs at the end of a downtrend, a continuation is likely. If a red Marabazu occurs at the end of an uptrend, a reversal is likely. Stars. Please refer to morning and evening star. Doji. Pattern that signals indecision. Doji open and close are virtually equal. Any bullish or bearish bias is based on preceding price action and future confirmation. Long-legged doji. This doji has long upper and lower wicks and appears when the price has moved up and down dramatically before the candle closed at the same level as it opened. Dragonfly doji. This doji is often seen after a moderate decline and is bottom reversal indicator when confirmed with a bullish engulfing. Gravestone doji. This doji is top reversal indicator when confirmed with a bearish engulfing. Buyers and sellers are in equilibrium. Bullish engulfing pattern. Bullish engulfing candle. Bullish engulfing candle is one of the most powerful profitable signal pattern forms. At the end of a downtrend, bearish candle, 1. With bullish candle engulfs previous bearish candle, 1. Buying pressure has overwhelmed the selling pressure. Bearish engulfing pattern. Bearish engulfing candle. Bearish engulfing candle chart pattern signals lower prices to come at the end of a uptrend. Bullish candle, 1. With bearish candle engulfs previous bullish candle, 1. This pattern shows sellers have overpowered the buyer. Bullish candle, pushing the price aggressively down. Bullish harami pattern. Bullish harami candle. Downtrend, bearish candle, 1. With bullish candle, 2, body contained within the range of the prior bearish candle. A buy signal could be triggered after the bullish yard. Bearish harami pattern. Bearish harami candle. Uptrend bullish candle, 1, with a small bearish body, 2, contained within the previous bullish candle body. Bullish Marabuzo pattern. Bullish Marabuzo candle. Wide range bar that opens near the low and closes near the high. Bullish candle best without tail 1 and 2. Shadow, sign going upward. Bearish Marubozu pattern. Bearish Marubozu candle. Bearish candle occurs end of downtrend. Or uptrend bearish candle, 1, body. Shows a strong downtrend begins, 2. Best to confirm by watching the next bearish candle. That appears after the Marubozu candle. Evening star pattern. Evening star candle. Long bullish candle, 1, in control followed by a gapped up small bullish, bearish candle, typically a doji candle. Then a down close bearish candle, 2. Below the middle of the second candle and close near the middle of the first candlestick in the pattern. The bears have now taken full control. Morning star pattern. Morning star candle. The morning star pattern usually occurs at the downtrend. Consists of 3 candlesticks bearish candle, 1. With gap below, small bullish, bearish candle, 2. Strong bullish candle, 3, a sign of uptrend. Shooting star pattern. Shooting star candle. The upper shadow is at least 2-3 times of the length of the real body, 1. Bearish reversal in an uptrend with little or non-existent wick and a small body, 1. Bear in control. Hammer pattern. Hammer candle. Downtrend, 1, hammer bullish candle A. Reversal sign with no upper wick and a long shadow, 2, at least twice the length of the real body bullish or bearish. Better if bullish candle. Inverted hammer pattern. Inverted hammer candle. Inverted hammer forms at the bottom of a downtrend, 1, it represents a reversal. Upper shadow, 2, at least 2 times as big as the real body, 3. Real body, 3, bullish or bearish, better if bullish. Hanging man pattern. Hanging man candlestick. The hanging man appears in an uptrend. A bearish sign about to reverse in an uptrend. The lower shadow must be 2 times greater than the size of the real body. Real body bullish or bearish, better if bearish. Piercing pattern. Piercing candlestick. The piercing candle is viewed as bullish candle, 1. Downtrend, 2, bearish candle, 3. With gap down, close above 50% of bearish candle. This signifies that buyers overwhelmed sellers. 3 white soldiers pattern. 3 white soldiers. 3 long bullish candlesticks that trend upward. Used to predict the reversal of current downtrend. Each should open above the previous candle's real body. And a close that exceeds the previous candle's high. Suggests a strong reversal pattern chart. 3 black crows pattern. 3 black crows candlesticks. 3 consecutive bearish reversal pattern that have closed lower than the previous day with each sessions open occurring within the body of the previous candle. It usually indicates a weakness in an established uptrend and the potential emergence of a downtrend. Dark cloud cover pattern. Dark cloud cover candlesticks. The dark cloud cover pattern is a bearish trend reversal or top reversal pattern uptrend, 1, bullish candle, 2, with gap, 3. Or no gap. Bearish candle, 4, closes below 50% of previous bullish candle. Pattern at or near a trend line or a resistance line. Suggest a downtrend. Tweezers top and bottom pattern. Tweezers top. The tweezers top occurs during an uptrend near resistance or upper trend lines. The first bullish candlestick with a large real body followed by a bearish candlestick with a short real body. The two candlesticks must have either the same high or their real bodies should be at the same high level. Tweezers bottom. The tweezers bottom occurs during a downtrend near support lines or at lower trend lines. The first bearish candlestick with a large real body, followed by a bullish candlestick with a short real body. The two candlesticks must have either the same low or the bottom of their real bodies should be at the same level. Thanks for watching. Hit the thumb up button to show your support.